The broadcast is now starting. All attendees are in listen-only mode.
Yes. So I can officially open this session. Ladies and gentlemen, it is with a great pleasure that I'm here today to open the webinar on the topic of IPSAS, International Public Sector Accounting Standards. On behalf of LEORON Professional Development Institute and the Financial Academy, let me warmly welcome you all here at the webinar. My name is Ivana. I work with LEORON Institute and I will be here as an event manager to support you with any technicalities if you need me in the background. And on the other side, we have Mike Turner, who is a UK Chartered Accountant, US Certified Public Accountant, and a Certified Financial Analyst, who is an expert facilitator specializing in IFRS, USG, AAP, and IPSAS. Mike has a long track record delivering training-made training solutions, over 20 years of work experience, ranging from the Big Four accounting firms to various public and private entities. More on his experience you will hear through this webinar, which will last for an hour. And the last 30 minutes will be dedicated to question and answers. So make sure to keep track notes of this delivery, and at the end you can go on with your questions by unmuting yourself. Mike, the floor is yours. Thank you.
Great. Thanks a lot, everybody. So welcome to today's webinar. Let me just turn my slideshow on. So what I wanted to talk about today, obviously, is international public sector accounting standards, and it's basically a little bit about myself. So as Ivana said, I've been involved with financial training for years. I'm more of a practical business person. I don't really consider myself an academic. And what I always like to focus on is how to get things done practically. So I got my first involvement with public sector accounting standards was back in 2005 or 2006 with NATO. And there's been this big emphasis or this big drive for governments to show more transparency and to show more financial accountability. And there was this idea that said, well, why don't we get governments or public institutions to use what we use in the private sector, which is accrual-based accounting? And at first glance, it sounds quite easy. It sounds like that should be no problem. But when you try to get governments to move to accrual-based accounting, it has a lot of issues. And I want to talk about those issues in this next hour. When my very first time, as I said, I was involved with NATO, I was told, Mike, we would like you to come train NATO on Ipsis. And back in 2005, I said, well, I'm not very familiar with Ipsis. I mean, I'm an IFRS person. I've been doing IFRS for decades. He said, no, Mike, don't worry. IFRS and Ipsis is the same thing. Well, it is in theory, but the practical difficulties of getting governments to move to accrual-based accounting is very difficult. A lot of governments use cash accounting, and the problem with cash accounting is it's very easy to pay bills when you want to pay them to manipulate your accounts. What we saw in the GCC region a couple of years ago when the prices of oil was suppressed is a lot of governments were under significant pressure to show that their budgets were not that bad. And if you remember, a lot of entities that were providing construction to the public sector in the GCC region, if you had any clients who you worked with construction companies, the problem that they had is a lot of those payments, which are supposed to be in 30 days or 90 days, became delayed for sometimes up to 2 years. Because what the governments were doing is saying, well, we're going to delay the payment. And if you use cash accounting by delaying the payment, you look a lot more healthy because you don't really show liabilities. You don't show unpaid bills like we do in the private sector. So what are the issues with public sector accounting? I mean, you have countries like Greece. I mean, over the last 100 years, Greece has gone bankrupt 9 times. And they call this the issues about intergenerational transfers. They say the problem is a lot of times our kids in some of these situations, like in Greece, are going to inherit more liabilities than their parents from the government. And the idea about Ipsis is at least to put, and liabilities is assets minus liabilities. So we're saying the government assets are less than the government liabilities. So governments have spent more and kids are going to be worse off than their parents. When Switzerland moved to this concept of accrual-based accounting, it was interesting. They found 100,000 pieces of property. Because obviously someone knows they have them, but the moment you put them into some sort of control system and you put numbers against it, and you're able to then look at those numbers, you're able to have a better understanding of how your country works. The challenge that we see here is, Eurozone debt is at high levels. US debt, especially what's going on right now, is becoming extremely large. And we have these huge deficits. And one of the things that Ipsis is saying, just like we have in the private sector, is financial transparency is going to help us understand and run our countries better. So the whole idea of Ipsis is not to decide how we spend the money, but to push governments to at least be accountable for whatever the decisions are. We talk about the United States right now. Obviously, we have a lot of political views there. And you have one side, the Biden administration wants to spend $6 trillion. Now, that's a political decision. But the issue is, if you spend all of this money, when we want to show, and we also have payments we have to make for Social Security, for retirees. And if we want to spend all this money and we don't show the reality to the users, we just say, don't worry about it, we'll worry about it tomorrow. Well, then the problem we have is we're making decisions to spend money without looking at the actual financial consequences. So what we're trying to do with Ipsis is to say, what are those financial consequences? And in the private sector, accrual accounting is very easy. In the private sector, it's all about, we book assets, we book liabilities, we keep track of them. Now with Biden's $6 trillion scheme, there are some different components. Some of those components are going to improve traditional infrastructure, for example, roads and bridges. Well, if you build a bridge that's going to last for 50 years, well, it kind of makes sense to show the expense of that bridge over when the American citizens get benefit over the next, how long that bridge is used. Bridges and dams and roads and airports. Another part of Biden's plan is to provide social benefits. He's saying, well, if we pay for kids' education, or if we give money to lower-income people so that they can be less financially stressed, well, that's fine. But from an asset point of view, there's no future benefit. You're sorting out an issue right now. So it's kind of hard to, from an accounting point of view, to call that infrastructure as an asset. Of Biden's term is an infrastructure to improve the living standards of some people that are disadvantaged. But from an accounting point of view, you probably wouldn't call that an asset. If that's the political decision, what we're trying to do is to show those financial consequences. So the idea of, and a classic example is pensions. In the UK, well, the best pension is to work for the government. So if you work for the US government, as a school teachers always complain how underpaid they are in the US. But what a school teacher doesn't realize is that when they retire, they get 80% of their salary if they've worked till the age of 60-ish, and they've worked for a long time. And for those of us in the private sector, to get 80% of your salary requires a lot of investment every year to put money aside for that. So with accrual accounting, we're trying to understand what are the consequences of those political decisions. So the idea of accrual accounting is to give better information both inside the organization, in other words, to Parliament, to the decision makers, to the senators, to the congressmen, whoever runs our country, and also to the general public. And with enhanced management information, the argument is with increased transparency, there's increased accountability, and the government spend taxpayer money better. That's the argument. We know if you take the United States, the big black box is military. And the problem with military spending is they say, well, it's kind of like it's top secret. We don't want to explain what the money is spent for. It's a national issue. Well, the problem is when there is no checks and balances is when you tend to find a lot of excess waste. So the concept of Ipsis is saying, if we can get governments to move to this accrual accounting concept, well, by doing so, what we're going to have is a massive amount of pressure to make sure that the money we spend, the decision makers understand the financial consequence. That's the idea. It's not going to change the discourse we have in the US now, where a lot of people want to spend, you know, there are different groups. There's some people that want to spend lots of money, and there's some people that don't want to spend, you know, money at all. But the idea about Ipsis is not to get into politics. The idea about Ipsis is to say, what is the financial consequence? So it's very interesting. If we look at, you know, in the private sector, we have assets, the things we own, and we have liabilities, the things that we have to pay money to. And what you normally expect is assets to be bigger than liabilities. When you start to look at some situations like Greece right now, you probably find that their liabilities, from a government point of view, exceed the assets because they've spent future taxpayers' money for current living. That's what we don't want to have. So what we're trying to do is to show a complete picture. We use different terms in the private sector. We don't use the word net surplus. We tend to use the word profit. But in the government sector, we use the word surplus. So surplus is a government term, and profit is probably a term we use in the private sector. We just look at some examples here I thought was very interesting. In Australia, now, when it comes to accrual accounting, Australia was probably one of the poster childs of doing excellent accrual accounting. And what was interesting is, if you look at their cash accounting, they showed a surplus of 2.1 billion, which is 0.3% of GDP, the gross domestic product. But when you look at accrual accounting, well, why would there be a difference? Well, oftentimes you spend money on debt. The US is doing a great job of this now. We're spending money by issuing debt. Well, from a cash flow point of view, it's not going to show that you have a deficit because from a cash flow point of view, you haven't spent the money. We use accrual accounting. It's interesting. The cash surplus, this is a few years ago in Australia, has gone from 2.1 billion down to just a fraction, 2.2 billion. So again, why is that? Well, we look at cash accounting as revenue and expenses on a cash basis. And accrual accounting is looking at, well, okay, revenue, expenses, and how the assets and liabilities change. And a lot of times, especially what's happening right now in the United States, is the government spends substantial amounts of money where they say, we'll pay it later. And because they're going to pay it later, that means future taxation. One of the big issues now in the States is they're talking about Donald Trump and the Republicans, when they were in control, they had a view to lower taxes. And that did stimulate the economy. Some would argue to what extent is open for debate. And then when you have the Democrats have a different perspective, they're saying as well, we need to start making people pay more taxes. So the problem is that when you use cash accounting, you don't really take care of and analyze the consequence of how future taxes are going to be. One of the things that scares me about the US is if we do spend the $6 trillion that they're proposing, well, one day we're going to have to pay for that. And that's the whole issue of accrual accounting. So when it comes to Ipsis, what is Ipsis? Well, in the private sector, we have IFRS, International Financial Reporting Standards, and I've been an expert at this for decades. And the government said, well, let's just use private sector accounting standards. And that's what Ipsis was all about. It was a public sector body that said, well, the best way to show fiscal responsibility is to simply take what we do in the private sector and copy it. That's fine, but remember, the private sector has an objective to make profit, right? In the public sector, if you're a police station or a hospital, you don't really have the objective to make profit. You have an objective to deliver social goods. So with this objective of social goods, the challenge is, okay, we have an objective of social goods. We can't use the traditional IFRS standards as they are. We have to start to modify them. So what Ipsis has done is they basically said, okay, let's look at the private sector as a benchmark, and let's try and modify those standards to be used in the public. Now remember, this is not an easy task. There's a lot of complications here. And I'll talk about some of the issues when we move to accrual accounting in a few minutes. So the whole idea of Ipsis is we want to provide information that is going to help decision-making be improved and to improve the accountability. Well, when you have some governments, some governments, like when I worked in Nigeria or in some African countries, they weren't that interested in being accountable. A lot of the politicians, they preferred to be opaque. But one of the reasons why they actually moved to Ipsis is when you have public financial statements, you could actually improve the country's credit rating. And when you improve the credit rating, what you can do is borrow cheaper. So it was interesting in Nigeria, a big emphasis there was not so much about accountability and so forth, because they had trouble buying into that. They liked things to be opaque because the politicians could then spend money on what they wanted to. But what they wanted to do is borrow cheaper. So that was probably the biggest advantage in a lot of emerging countries, and why they actually have decided in some situations to move to accrual-based accounting. So Ipsis is used by lots of organizations. What I found interesting is the rich Western countries, a lot of Western European countries were saying they didn't really use accrual accounting themselves so much, but they were putting pressure through the World Bank and the IMF and different organizations that other countries should use accrual accounting. So for example, Greece was under massive pressure to use accrual accounting because they were getting money from their European neighbors. But a lot of those same European neighbors were not so keen on accrual accounting, because the moment you show these deficits and stuff, it becomes a problem from a political point of view. There's quite a lot of hypocrisy in how this has been done. So what is Ipsis? Ipsis is basically, they're high quality standards to be applied in the public sector. And when we say public sector, we're talking about national, regional, or local governments. And they're designed for what we call general purpose financial statements. So they're actually designed not for internal. So one of the mistakes I oftentimes hear is people say, well, we're going to use Ipsis to run and make decisions internally. So we have internally and externally. Ipsis is about external accountability. I mean, I've seen a lot of presentations and a lot of people say a lot of crazy things. I was told in one presentation, I remember them saying, well, if we use Ipsis, we'll be able to monitor our repairs and maintenance expenditure better because depreciation, repairs, and maintenance. That's not really true. Ipsis is trying to say to outsiders, we want to show some accountability for people that aren't within our organization. That's the whole idea of Ipsis. Ipsis is about accountability. And what we do is we take the accrual-based Ipsis, what we use in IFRS, and we adopt them where appropriate. So again, general purpose financial statements. So Ipsis isn't designed for internal management accounts. Ipsis is designed for what you're going to disclose to the citizens of your country at large. That's what it's really about. Just like in commercial accounting, IFRS isn't really designed for inside decisions. We have management accounting. And with management accounting, there's a whole range of way we do things, because if it's internal, you can make your own rules. The idea is that you disclose, put stuff on the outside world. We want it to be done in a framework so all countries, whether it's France, Germany, the UAE, Russia, the UK, they do things in a way that's more comparable. That's the whole idea of this Ipsis. The biggest impacts of Ipsis, first of all, it's a lot of work to do though, is you get an idea of what assets you have. And you obviously strengthen how you report financially. And you make a lot of uniformity. You get everybody within the government. So if we look at the United Arab Emirates, there are a lot of different ministries there, and you got them to do things in a more consistent way. It's good for international aid. So when I did work in Ghana, for example, a large part of the budget from Ghana is international aid. And it's able for those donors, those international donors. There's JACPA from Japan, there's GIZ from Germany, USAID, there's DIPFA from the UK, and there's various ones from the Arab world. It's basically, it helps the donors understand how that money is being spent. Now remember, it doesn't tell you if it's spent wisely. It just tells you what is the cause it's being spent on. So it has a long-term impact because now we have sort of this accountability. And it can be used to actually influence the behavior of politicians, can be used to enhance the behavior of public officials. It has quite a lot of impact. Now, when you move to Ipsis, what are the issues? What are the challenges? It's an accrual-based system, so you gotta change the way of thinking. We want to get our accountants in the government to start recording things based on accrual. The biggest nightmare is systems. When we did this work in Ghana, so in Ghana, I was tasked to write the Ipsis implementation plan for the entire country. Now, when I wrote that plan, it also has a very political element because they're under pressure. They want to show the World Bank, the IMF, that this poster child. So they came up with all this pressure to do things quicker. And then the problem is countries put the pressure in to do things quicker, and they oftentimes, yes, you can be Ipsis compliant. What do? You just say we're Ipsis compliant, but you do it all wrong. So normally, if you want to do Ipsis correctly, the most important thing is, do you have an IT system? Do you have the software? Do you have the hardware? Do you have the platform to record stuff correctly? And that requires a whole change of the way we do things. And to change in government, there's a bigger emphasis on accountability and transparency. Some governments are not really into transparency. Some governments prefer things to be opaque. One of the issues, I saw a presentation about the Middle East, which I thought was very interesting, and they were saying, as the governments there move away from the petrol-based source of revenue, and they start to tax the citizens, the challenge that you're going to have is the moment you ask citizens to pay money, citizens are going to say, well, we want to see what you're spending our money on. And there's going to be a lot more pressure on accountability. Well, if you're going to actually tax me and take my money, I should have a greater say. And that's kind of like the role of Ipsis, where if the government's paying it with oil or with their own money, a lot of times there's a perception, or the way it works is the government says, well, you're not paying, so just, we're going to spend the money how we want. And as we move forward, we actually move in from accrual accounting to also accrual budgeting. So traditionally what happens is governments have used cash accounting. In other words, you show the expense when you spend the money. That's the historical way it was done. Then we moved on to commitment accounting, where we booked expenses based on purchased orders. It's sometimes called encumbrance accounting. And these are not Ipsis. The last one, when we move on to accrual accounting, that's Ipsis. So Ipsis is all about accrual accounting. We book a liability when we have these trigger events. So how we move from cash accounting to accrual accounting, every consultant and everybody has their own perspective of how they do this. We generally go from, well, the way Ipsis is designed is we have our cash policies, and we go from cash policies, and there is a set of standards on cash-based Ipsis. Personally, I don't think very much of it. Cash-based Ipsis, cash-based Ipsis is more about disclosures, okay? And cash-based Ipsis really is saying, Ipsis is saying you either do cash or accrual. Now, I don't agree with that completely, but when you have cash-based Ipsis, it's basically there's some disclosures. What a lot of countries do as they move to accrual-based Ipsis is they start to gradually change and have some cash and some accrual. And that's called modified cash or modified accrual. Now, that's not Ipsis compliant. Ipsis says you're either cash or accrual. But the idea that Ipsis had is we have cash standards, and that allows us to move to accrual accounting standards. So Ipsis has been used in the UAE for a number of years, but it was cash-based Ipsis. That was much more about disclosures. Accrual-based Ipsis is the really difficult one. It's where Ipsis is basically from IFRS. It's converged as much as possible. Now, what we do is we change standards when they don't make sense. For example, we talk about Ipsis 23, taxes. Well, in the private sector, if I go to Walmart and I buy a product, I pay money and I exchange and get something back. That's called an exchange transaction. Well, in the public sector, what happens is you pay a tax based on your income. And you don't get something back directly based on what you pay. So if you're a multimillionaire making a lot of money, you still have the same fire and police protection as a as an average person. So in the government sector, we said, well, So we had some specific guidance on another type of transaction, which you don't really find in the private sector, called non-exchange. A non-exchange is where what you pay and what you get don't match up. So let's come up with a way to account for those. So what we're trying to do is use IFRS standards, which we have in the private sector. And then what we do is we modify them and we come up with specific things that don't make sense for the public sector. I mean, it's not the objective of the fire department to make a profit. It's the objective of the fire department to put out fires and save lives. So that's how we deal with this. There's been a lot of lessons that we've learned. And what some of the things that have happened. Because of Ipsis, there was a lot more accountability. You had in Greece, in Europe, in a lot of countries, you had the introduction of these toll roads. And what we'd say is, well, if there's a toll fee, should the bridge, the cost of the liabilities, which are these bonds over many years, be kept on the books? Well, there are different ways these bridges were funded. There were some bridges which were funded where the government guaranteed to make the payments. So if the toll revenue was there or wasn't there, it would be paid for by the government. And there were other types of bridges where the private investors took all the risk. So initially when this came out, governments were saying, well, the bridge is paid for by tolls, but if the government was on the hook, if the tolls were insufficient, that was more probably of a government liability. So because of this move to accountability, there was a big drive by a lot of governments to take some assets, infrastructure, and put them in the private domain. Bridges was the classic one. They did the same thing with hospitals in the UK, where private investment groups would build hospitals. Now, if you think about it, it's kind of silly because the UK government can borrow cheaper than anybody else. So you go to the private sector, they build a hospital and they rent it back to the government. So the problem with that is the private sector wants to get a return of 6-7%. But the government can borrow at 2-3%. So some of this stuff was done very poorly, and I'm very critical of. So the political pressure did a lot of weird things. Pensions is a classic one. Historically, pensions, government pensions, were very generous. If you were a policeman for 30 years, after 30 years, you would get an 80% pension. The problem was when these pensions started, most people didn't live that long. I mean, if you go back 50, 60, 80 years ago, a lot of people didn't live to 100. 100 today is not so uncommon. I was back up in Yosemite in California about 2 weeks ago with my mom and dad. We were doing a hike, just a short hike, 5-6 miles. But on that short hike of 6 miles, we spoke to a lady who just had her 100th birthday. Now, she was being pushed around in a wheelchair. It was a paved hike. My parents in their 80s, and they're a lot better shape. But obviously, we didn't see that years ago. So the problem we have is people are living longer. Now, there's nothing wrong with giving people a pension for the rest of their lives. However, what we're saying as an Ipsis person is we're saying, let's at least record the consequence. So if you're a policeman for 30 years, the issue is, what is the consequence because of you being a police for 30 years? What is the consequence that when you retire and we agreed to pay you these huge benefits? That's the idea of Ipsis, to say, let's record and show those financial consequences. So what's happened with pensions in the UK, for example, they changed it where a policeman used to get 100% pension, or a very high percentage, if they work 30 years or 35 years. So you would take the years worked. So what they would used to do, and they still do it, they just changed the formula. So they would say, okay, what we're going to do is take the years worked over a factor, which say used to be 35, times your salary. So if, for example, you work 35 years, that would be 100% of your final salary. Now what they've done in the UK is they've changed this denominator for policemen to 80 years. So if you're a policeman, if you're a new policeman and you worked for 30 years, you would get 3/8 of your final salary. So if I do 3/8, it's a lot less. So what's happening, this is a pension of 37%. So what's happening is my generation, I'm 50, that is going to be retiring soon, do not have the same safety net that our parents did. A lot of our parents had pensions of 80, 100%. So what happened in the UK is they changed the pensions for public services. And what they generally do is they generally grandfather them. In the private sector, we moved away from defined benefit, which is basically saying you get a pension based on your final salary. And they moved to this defined contribution where the government, where people would say, and some governments have done this, would say, well, whatever you make this year, we'll put 15%, 20% of it into an investment fund. And however that fund performs, that's your retirement. Now, the problem with that is if the fund doesn't perform, you're going to retire with bread and butter. But if the investment performs, you're going to retire with caviar. That's the problem. So again, people get upset. They say, well, just because we tell you what the numbers are, don't get upset with us about the decisions you make. We're saying if you want to give people these big pensions, that's a political decision. But let's understand the financial cost. That's the whole idea of Ipsis. One of the other benefits we found with Ipsis is there's a lot more need for management information. So that's one of the benefits that we're finding. And the government's trying to question things more. Commercial accounting, we're finding in the private sector, there's a skill set. And if we could take some of that skill set and stick it into the public sector, we get better systems. So what you find is the countries that are most successful in implementing accrual accounting get, not everybody, but a lot of accountants who've worked in private sector to work with public sector accountants to make the change. Because the private sector is very much focused on accountability, whereas the public sector is not so much focused on accountability. It's historically been focused on more, there wasn't the transparency. Again, I'll ask questions, I'll open up the questions in a few minutes. So when you implement Ipsis, what are the issues? Well, the idea is we go from cash to accrual. And the idea is we go from monitoring budgets to saying what assets, what resources do we have, and what liabilities do we incur to have those resources. So it's a complete change of mindset. It's a complete change of mindset. We used to report on budget spending. The idea of Ipsis is report on these general purpose financial statements. What are your assets? What are your liabilities? We used to focus on what are called the cash flows. And now the concept is this, and this takes a while to get the whole of government financial statements to show the financial situation of the entire government. Now, how long does it take to get this done? Canada took 14 years, $600 million. Canada's a small country, people-wise. New Zealand, more sheep than people, 6 years. South Africa, they're not finished yet. So it takes many, many years. The success stories generally are New Zealand, Australia, they were super successful. But again, they're not very large populations and they're reasonably wealthy countries. Why does it take so long? Well, it's a mindset. To get all your assets in an asset register that shows depreciation, it might sound easy, but a lot of government organizations don't have that sort of data, and they're not used to that. You'll notice that New Zealand uses accrual accounting and accrual budgeting. Most countries use cash budgeting. So what's accrual budgeting? Well, if you buy a computer that has a useful life of 5 years, and the computer is $500, you would say, well, that's going to affect my budget $100 for the next 5 years. Just like with financial accounting, you budget for when you consume it. This is the most complicated. In a lot of countries, the end game would be to get accrual accounting and accrual budgeting, but that ain't so easy. The benefit of moving to this is my business partner, one of my business in India is I do back office work for doctors and lawyers in California. And my partner always says to me, Mike, no measure, no management. Same for governments. If you don't measure it, you're not managing it. The idea of Ipsis is we now have a measure that's going to be in the public domain. And we're going to look at all types of debt, not just bonds. So we get the whole liabilities. We find assets. The assets get depreciated. What in a lot of countries happened is we sometimes take assets and we redeploy them to other organizations, or we sell off surplus assets. We move to more efficient ways to deliver service. There's more emphasis to make better decisions. It's a whole mindset change. Whenever I work with Ipsis, I always ask, because I see a lot of crazy things out there. A lot of these consultants are quite academic in what they say. It's quite frustrating. I always say, when you work with Ipsis, you want to get someone who's got a sound like, why I think I'm really good at what I enjoy is I don't want to make it political. When I was working in Ghana, I said, that's political. You want to do it quickly. And so what happens is we came up with a wonderful plan. They squeezed it down because politically that's what the politicians wanted to see. And they didn't follow the plan, but at least they look good in that moment of time. I remember having debates with the big four accounting firms. I said, if you're going to do Ipsis, let's just worry about the biggest issue is fixed assets, property, plant, and equipment. And what oftentimes happens is you spend a lot of resources and time to go back and find old assets and to record them and to get the books up to date. I said, to me, that doesn't make any sense. What I prefer to do is let's focus on all the new assets, all the new additions. And if all the new assets and new additions are being recorded correctly in a system that generates depreciation, that's a major step towards accountability. And once you get the process and system in place, you can then choose, okay, now let's go back and look at some of the bigger old assets. Like, for example, the military, you might look at the planes, the bigger things, the real estate, the land, and the buildings. So when you do embark on a transition to Ipsis, be very careful, because a lot of the times you find in the public sector, you find the consultants there are not the same standards as the private sector. A lot of you find a lot of academics and they suggest a lot of crazy things. In the UK, how we transitioned to public sector, they started with public corporations. What do we mean by that? The power company. The power company charges a profit, charges what they charge to make a profit, they give it back to the treasury. So a lot of governments have the ports, the harbors, the airports. they run and they make a surplus or a profit, which they give back to the central government. So it started with this. In the UK, we then worked on national health, which was easier because they were a little bit more organized. Then they went to local governments, and then they did partial accrual accounting and full accrual accounting, and the last was central governments. Remember, the time scale, be realistic. It takes a long time. In the UK, the first draft was in 1994. So if a baby was born there, and the first set of whole of government accounts was ready in 2009. It's 15 years later. So if you're going to embark on this, remember it's not going to be the easiest thing. What I wanted to do now is open up to questions. So if you have any questions, we can go through your questions now. I can unmute you if you have a question. Let me know and I'll go through your questions. Are there any questions from anybody?
Okay, so if anyone has something that has been triggered before while Mike was delivering this interesting topic, so you can maybe ask a question now, or alternatively you can address to us and get back with your requirements over email. We'll still be available to respond to anything that might be interesting after this presentation. Mike, you can share
I'll give you my email.
Well, this is cool. Okay, so anyone maybe has come out with a question?
You're a quiet group.
Yes, very quiet group. Well, that's fine. Still, you can contact Mike for any interest you may have regarding this topic that he has just delivered. The same program will be extended and delivered as a training program with LEORON.
Hey, there's some questions here I see here. One second. Ahmed, let me unmute you. Ahmed, do you have a question?
Yes, Mike. How you doing?
Great. How you doing?
Good. Mike, when you said that the financials presentations for the governments have changed and they are now following the Ipsis, and it's not anymore about statement financial positions, cash flow, and things like this. So what happened to these financials, the normal financials that's known to everyone else? What happened to the cash flow? What happened to the statement of financial positions? How it's presented nowadays under Ipsis?
What I'm saying there is the emphasis is different. Before Ipsis, it was more about what's our cash surplus. The emphasis on Ipsis is more about not the cash surplus. It's more about all the assets and all the liabilities. So of course, we still have those primary statements, but if you go back 10 years or 5 years or before Ipsis, it was more about what's our surplus? What's my tax income? What did we spend? And now it's more about, well, that's one part of the puzzle, but it's more about, okay, what assets have you created to help you grow infrastructure? And also, what liabilities have you done to do that? Does that make a bit more sense? So it's more holistic than before. Previously, it was very much just only on, what did we spend?
Okay, if
Is that all, Ahmed? Ahmed? Then there's a question here from Faiz. Oh, I'm gonna go
Yeah,
ahead.
yeah, it's okay. It's okay.
Great.
Thank you.
Sure.
Whoever
Fawaz?
has a question can raise hands or press on the question mark, and we will unmute you and you can go on with
I'm
it.
doing it right now. So Fawaz,
Yeah. Yes.
go ahead.
Thank you, Mr. Mike. Good session. Just inquiring about what's the similarities between IPSAS and IAS.
Okay. First of all, IAS and IFRS is the same thing. So what happened is IFRS has IAS standards 1 to 41, which were issued prior to 2003. And IFRS starts with 1 and goes up to, what is it, 19 or 20 now? And those are the ones that were current issued. So IFRS is a term which is basically International Financial Reporting Standards, which is for the private sector, which has the older standards are called IAS, the new ones are called IFRS, but they're all equal. And if I compare that to Ipsis, what Ipsis does is it copy paste IFRS, and then what it does is it makes changes if it needs to. So for example, when it came to the revenue standard, a key thing in the private sector is you book revenue when you deliver the product, the service, or the good. Well, governments, if I say I'm going to tax you, I don't give you anything sometimes. I take your tax money and I use it for something completely different. So the government, in Ipsis, what we've done is taken private sector standards and we modify them where we need to. If they don't need to be modified, they're not modified. So Ipsis is oftentimes the words are exactly the same, but then we add things. For example, in IFRS, an asset is defined. So if we take an asset in IFRS is an economic benefit. Okay, because in the private sector, assets make you money. So if you apply that definition to the military, well, do those assets make you money, or the police department? So in Ipsis, we then took the definition and we said, well, we do have economic benefits that are some types of assets, because a government might own a water plant and we charge water to the people that use it and we make money out of it. But we also have assets like the police force, jails, schools, hospitals, where we don't get an economic benefit. So what we've done in Ipsis is we said, we've taken the IFRS concept and then we expanded it. So in Ipsis, an asset could be an economic benefit or a social benefit. So we've taken the definition and we made it appropriate for the public sector because it wasn't appropriate as it was for the private sector. Hussein, do you have a question as well?
Great, thank you, Chair, Mr. Mike. Was amazing.
Thank you. Hope you can join us on one of our courses.
Hussein Al-Tahabi, we can see you have raised hand. Would you like?
Actually, first of all, thanks, Mr. Michael. Actually, you answer most of my question as IAS and IFRS. Actually, just on my concerning is usually the government, they use a cash basis. So it's why they call it IPSS? Why they call it like this name? I mean, international public standard. So why they don't call it, let's say, IFRS for government or something like this? Why they change? Always we have a lot of IAS, IFRS, IPSAS, a lot of things like this.
Well, I think the reason why they did it is they wanted to have a specific set of standards that was appropriate for the government. My very first role with Ipsis was back with NATO in 2005, 2006. And we tried to use IFRS for NATO because the very first version of Ipsis was an extreme copy paste with no changes. So you get into inventory. Inventory has a lower of cost or net realizable value. Well, net realizable value is based on selling price. So how do you do the net realizable value of military equipment that you'll never sell? So I think the idea is they wanted to be very clear. It was a specific set of standards to be used for what was to be specifically a public government organization, because IFRS could not be used without making significant changes to some sections. So I think, why they came with that name, I don't know, but they were just trying, they wanted to be people to realize it's different. It's IFRS as much as possible, but it's also tailored. So since I started working with IFRS in 2000, I worked with IFRS since the 90s, but since I've been working with Ipsis, Ipsis has been changed significantly, and it's complicated. It's the political complications. I found Ipsis much more difficult than IFRS. Does that make a bit of sense?
Yes. Thank you, Mr.
Sure.
Do we have more questions coming?
I heard from Samir. Oh, I gotta unmute you 1 second. Samir, I unmuted you.
Hello,
ahead.
good evening.
Good evening.
Thank you very much for the seminar. It's very informative. Actually, I would like to ask if Ipsis is applicable also to the NGOs, or it's only designed for government sector?
That's an excellent question.
If Ipsis is not applicable for NGOs, so what kind of standards do you apply there? Is it IFRS, or it's just like hybrid approach between both?
NGO, sure. That's an excellent question. Ipsis is specifically excludes NGOs.
Mm-hmm.
So then the question is, what should NGOs use? If you look at IFRS is really for commercial entities. If you look at across the pond to the United States, the US has specific standards for government. We have specific standards for NGOs. And we have specific standards for commercial entities. There isn't really, I've seen a lot of NGOs used fund accounting based on what we have in US GAAP, because some of the stuff in commercial accounting doesn't make sense. I mean, NGOs get donations, those are not an exchange transactions. So this is, you could try and use IFRS and modify it, or you could try and use what we use in US GAAP, or the Americans use for NGOs. But you could use IFRS. Except IFRS isn't really written and designed for NGOs. That's the problem. So it's only out of scope with Ipsis. It's not out of scope for IFRS. But I would use more US GAAP fund accounting of some sort. That would be my suggestion. Because you normally with NGOs you have different funds. So people donate, for example, you take a church or a religious organization, people donate money for the flood victims. People donate money for blankets. People donate money to build houses and water projects in Africa. And generally, you want to keep the money that people donate is restricted to that particular fund. So I would prefer to use some sort of fund accounting that takes that into account. I'm not an expert on NGO accounting, but NGOs don't really have a great international set of standards for them. It hasn't been the focus of IFRS. Does that make sense, Samir?
Yes, sure.
Sheikh Bishra, if I said it correct. Sheikh, go ahead.
Shaikh, would you need help to unmute and
I unmuted him.
Yes, thank you, Mike.
You there, Sheikh? That you're self-muted.
Do we have another question maybe from someone else?
Ahmed, I see your hands up. Do you have another question, Ahmed?
Okay, so
Are there any other questions from anybody? Okay, well, you can always email me. Here's my email, mikturner@gmail.com. And if you have any questions about Ipsis and so forth, if you have any questions about courses, you can email Ivana, she'll take care of that. But if any questions about the technical content, you're welcome to send me an email. Sometimes I respond with a voice clip because it's too much to type in. So anyways, I hope you got something out of today, and it'd be great to see you on one of our future courses.
well, the same course certificate in IPSAS will be delivered on August 1st till the 5th via LEORON. So you may approach us or the Financial Academy if it was your source of information at the beginning to register and take place at the certified course. If there is no question, we can maybe close this session and we'll stay at your disposal for anything you may need even after this webinar. Thank you so much for your time today. Thank you, Mike. It was a great presentation and looking forward to see you at the training as well.
Thank you. Good evening, everybody.
Thank you.